we reacting to yesterday's story and not sticking to what tomorrow is going to bring? Let's ask the experts. Ajay Bagga is joining us along with the chairman of Inditrade Capital, Sudip Bandyopadhyay, also with us this evening. Gentlemen, thank you for making the time and joining us on India Tonight. Lots of questions on investor minds right now. And whether the markets are reacting to yesterday's story or not, Ajay Bagga, what do you think it is? Because concerns are there when you have this kind of sell-off, when you're seeing what's happening in global markets, you wonder how insulated India is going to be. What's your thought in this?
Yeah, no, definitely the sentiment has turned quite negative. Definitely the volatility is increased a lot. See where the VIX is both for India and the US, and with the Japanese market is seeing unwinding, a very disorderly unwinding, despite having had a year to see that there is a new Bank of Japan chairman and rates will go up in Japan. Still, we are seeing a very disorderly unwinding because Vikram, the favorite trade was to go short the yen and go buy the big tech in US. That was the favorite trade. Others that were working was short yen and buy Mexican peso, short yen, buy the Aussie dollar. All three trades have become unstuck. And you can see both sides of those are giving pain. The yen has gone up by 10%. So it's not that 15 basis point rate hike which has roiled the market. It's the 10, 11% hike in the yen versus dollar, yen versus peso, yen versus Aussie, which is causing the pain. Second, the Japanese investors had massive margin amounts sitting there. There was a tax advantage product that was introduced last year for Japanese retail investors. That unwinding is happening. That will probably take 2 to 4 more days for it to fully work through. And with every fall, there is some other margin call that gets triggered. This morning in the US, I was just sitting on the screen and, gold was down 3%. Then the bullion vault people came by and Interactive Brokers also put out a note that more it is because of margin calls on stocks that people are selling gold. It's not that gold has lost its safe haven status. And unlike what is happening on Bitcoin and the companies that offer crypto. So overall, congruence of too many factors together at all-time high markets, at very high valuation levels, and with a lot of concentration in the US market because of the Magnificent Seven. All this has come through. Geopolitical risk we have seen every quarter over the last 3, 4 years. Something or the other has been happening. But again, I'm saying this is not 2000. This is still not 2008. There is no contagion yet, even though markets across the world are falling. But it's not carried positions and contagion that's causing it. It is more the 1920s, roaring 20s, which had 3, 4 big corrections like this and ultimately ended in 1929 with the Great Depression.
Yes.
We are still maybe 1/3 of the way in the roaring 2020s. This is not
Fair
very
enough.
sustained
So
correction.
you believe that this is a temporary blip. It's not something that we need to be excessively worried about. I was speaking to Santosh Rao at the end of last week as well, and he was calling it, because of the multiple factors at play, he was calling it a perfect storm as well. But of course, there has been a lot of talk about this continuing strength in India's structural story. In fact, Sudip Bandyopadhyay, before I come to you, there is this word that we got from Jim Rogers as well. And he believes that this was long overdue, this meltdown, and he's waiting for the next sell-off before he starts investing. I just want us to hear what he said earlier.
The U.S. has not had a problem since 2008, 2009. That's the longest in American history. So America, and therefore the world, is long overdue for a problem. And I will say to you, I have a lot of cash. The reason I have a lot of cash is because I expect the next sell-off to be the worst in my lifetime, because the debt has gone up by so very, very much everywhere. Even India has debt now. So you should be worried. I am worried. I am waiting for this collapse to come because I know it's going to be very, very bad. Maybe it's here. I don't know. You know, the world markets have had problems every few years for centuries. It's not unusual. India has been very strong, but everybody has been very strong except China. So we're overdue.
Well, Jim Rogers, Sudip Bandyopadhyay, is saying that this was long overdue. Do you agree with what he is saying? As far as resilience of the Indian economy as a beacon of hope for equities around the world, where does India stand today when you see a global meltdown, the kind that we are seeing today?
Does stand on a very strong wicket. Even if you consider today's fall, which is what we are discussing today as far as India is concerned, we fell much lower than other markets, comparable markets. So I think India is in a very strong wicket. And look, the issue in US is not something which is new. We pretty much know that US Fed has been waiting. They've been talking about changing their stance, reducing the interest rates going forward. So they were expecting softening of the labor data, employment data, and they were supposed to be acting in September. Now probably they will act little in advance because of what's happening in the markets world over. And that will again, I believe strongly, that change the mood of the market, particularly in emerging markets like India. Now, what's happening to a great extent is kind of a technical issue because these, yen unwinding, yen trade unwinding, and it was bound to happen. I don't know. I agree with Ajayji to an extent that, in spite of this fact being known very well to the market, I think market was trying to extract the last, amount of juice from this yen trade. And at some point of time, I think the writing was on the wall that this is going to happen, and that's pretty much what happened when Japanese central bank started increasing the interest rates, and that kind of created unviable situation for many of these yen trades, and that's what is happening in Japan. It coincided, unfortunately, with soft US labor data, and of course, a lot of disturbance in West Asia. Now, as far as India is concerned, I don't think we should be too worried. Of course, we have to keep watching the developments, whether it's the yen unwinding, whether it's US Fed action or the West Asian geopolitical tension. We have to keep watching it. But the fact is, India inherently is very strong. We are looking at a GDP growth of 7% plus minus comfortably, even in this fiscal. The fiscal consolidation is happening. The glide path is being maintained by the government. And that does give India a significant strength. Corporate India has been performing well. They have tightened their belts. And as far as the markets are concerned, look at the fact. The amount of liquidity coming in the market is humongous.
Right.
20 to 22,000 is coming.
And is
SIP.
much of that DIIs, you think, that we are holding up?
Yeah, absolutely. DIIs are holding up. And look, India, if you look at the data from January till end of July, FII inflow in India was negligible. They were net, net probably they were almost close to zero. There were hardly any net money coming from FIIs. Of course, the sentiment has become bad and everybody is selling. There's a bit of a nervousness. And end of the day, a bit of correction is good for the market. It is a healthy trend. We have been going one way up, 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 and bit of consolidation at elevated levels is par for the course.
This is going to be a small blip. It is going to be a correction, is what you say. In times like this, where you're seeing global markets take that downturn, you wonder how much of a hit India is likely to take. But about these yen carry trades, Mr. Bagga, because the yen was available cheaply for a long time, that currency was used to invest into global equity markets for higher returns. And markets like India, Indian equities got some of that as well. Now that the yen has gotten stronger against the dollar, do you think this is going to have an impact on our markets, that we'll take a hit because of it?
See, the estimates are not there, Vikram. 2 lakh crores are the direct Japanese FIs. But from my time, I remember most of the Japanese investors would prefer a Cayman or a Luxembourg or an Ireland-focused fund, domiciled fund, for the protection they got, and some were Delaware funds as well. So very difficult to know what is the, out of that 71 lakh crore of FIs, how much is the Japanese carry trade sitting in our markets. Now, it won't go out because of the fundamentals of the Indian markets. Why did I give you the example of gold today falling 3%? Because gold was sold off today for the margin calls. India will get sold to meet margin calls elsewhere or liquidity calls for gem funds elsewhere. That's what's happening to us since 2008 because we are liquid enough and people have made profits from us. Gold is up 15% year to date. So the profits in stocks and the margin calls are being offset by selling gold. Same thing will happen on the Indian. We don't have a fix on the amount. So we can't say how long or how deep. But my assessment, seeing the entire scenario, it's not a contagion yet. Fundamentals are not broken, even for the US. You know, April US revised jobs number, Vikram,
Yes.
was 108,000. We all missed it because we don't look at the revised numbers.
Right.
Just now, the July final PMI numbers for US are coming at 54.
Right.
Services is coming at 55. The market went up. Nvidia started down 15%. It went up and it fell to 7 then finally. There is a lot of retail money coming into leveraged semiconductor ETFs. That's
Right.
what the retailers are buying
Right.
today. So
you're saying that
sentiment
there is enough liquidity even in our markets, Mr. Bagga. You believe that there is enough to hold things up. What do you recommend an investor should do today? Should an investor stay put, stay invested, or do you think this is an opportunity to buy on dips even?
prepare, don't panic. That is the mantra. Prepare yourself that for the worst scenario. I don't think the worst is happening. Relook at your asset allocation. Third, no selling. There's no need to sell India in a scenario like this. I'm not saying because I have long positions. I have myself invested today and I invested in the entire market and I bought the indices because I can't make out right now. There will be a rotation of out of sectors and into sectors. I don't know what the global scenario will be, but the India story I know. So I bought the entire market. I bought the 500 indices. I bought small cap, mid caps. Despite the 4% cuts, I'll buy them again in a few days' time as things settle down. I would say stay put, prepare, don't panic. We are between a soft landing versus a hard landing in the US. You and I won't get to know till we have reached that stage. I don't think we are anywhere near. GDP in the US second quarter was 2.8% year on year. The GDP now for Atlanta Fed is running at 2.5%. Chicago Fed president, you must see his speech yesterday. He was very clear. He says Fed is not reactive like the markets. And one institution, Vikram, I spoke in the morning. I said, okay, let's see scenarios. I said, what if Fed cuts 1% today? He says the market is finished because you will keep thinking, what are the skeletons I am missing? He said Fed should do nothing. September 18th, if the data calls for a rate cut, let them do 25 basis points. That's the most confidence boosting thing they can do. Don't do an emergency cut. I think that's very wise things. He's an 80-year-old out of the markets, but a very favorite person of mine, sits out of rural Germany, but tracks global markets.
That's very interesting because at this point in time, people are debating whether the Fed has held back too long to see the kind of weakness creep into the American economy. Is it going to be too little, too late is the kind of question that is going around at this stage at least. But you did talk about relooking your sectoral weightage in portfolios today, Mr. Bandyopadhyay. What do you think makes sense? For one, should you reduce exposure to IT? And that's just an example, an increase in staples. What would a rejig today look like?
Well, I won't, rush into rejigging the portfolio. I think, this is, as I mentioned, this is a temporary phase. As far as Indian markets are concerned, the fundamentals are strong. The companies and sectors which were performing well, I believe they will continue to do well. Yes, we can discuss and debate the future order flow of IT companies because 50-60% of their income is international on an average. So we can discuss maybe only IT, but rest of the sectors, I don't think I'll be too worried, except probably metals just in case there is a major problem in China and some of the other markets which consume metals to a great extent. As far as domestic focused sectors are concerned, I have no doubts whatsoever. So construction, infrastructure, FMCG, consumer durables, I don't see any need to move out of these. As far as IT is concerned, keep watching what's happening in the global scenario. As far as metals is concerned, keep watching the global scenario. I think that would be my advice.
Mr. Bagga, markets are expecting central banks around the world to start cutting rates. Japan, of course, works differently, and we're seeing the impact of that play out. But if that is the expectation that, all central banks are going to start cutting rates, and perhaps, like you pointed out, maybe the Fed will wait until September and not do any out-of-turn ones. But what do you expect the RBI's move to be on the 8th of August? Is it still going to be status quo?
RBI will be a follower. Rupee has very sharply moved to the second worst performing Asian currency. So RBI has to protect the rupee. It has an inflation issue. RBI will be a follower. So rate cut may be December. But we will get 2 rate cuts by March because the Fed will cut. Right now, Vikram, it's a question of credibility. So the Fed lost it in 2021-22. Now they have been restrictive for too long. But to go to the market and openly say, yes, we were restrictive with this kind of economic data. And Powell wants to go down as the Paul Volcker, not the Arthur Burns, not to be known as somebody who cut too soon. So again, I would say today, Mary Daly of San Francisco Fed is speaking. We'll get good pointers from her. I would say they will say we are not as reactive as markets. Markets might have reacted. Our function is inflation, jobs, and growth. It's balanced right now, but we don't see the need for an emergency cut. They might put in liquidity. I don't know how much is going out because of the carry trade unwinding. That they would have a better idea. So expect some liquidity, injection in a coordinated manner by global central banks. But I don't think anyone will go out of the way for rate cuts. That will really panic the markets.
Global cues actually have a role to play, whether it's going to weigh more heavily on the MPC's vote on interest rate. That is going to be seen more than the inflation targets. But as these fears keep global markets in this bear grip, at least what we're seeing right now, there is this meltdown underway on Wall Street. Like I pointed out, the big culprit, disappointing July jobs data. It points at a hard landing in the US economy. Will it be? Won't it be? A possible American recession where growth stalls? Is the Fed lacking in slashing those interest rates to help an economy from crumbling? It's an ongoing debate. But for the moment, with geopolitical tensions in West Asia, Mr. Bandyopadhyay pointed towards that. The Bank of Japan's move to hike rates after staying at 0% for the longest time. All of that has spooked the markets. What we should be doing with our equities, we rely on expert advice like we've gotten tonight from Ajay Bagga and Sudip Bandyopadhyay. Very thankful for it. Thank you, gentlemen. Good to get your inputs and look forward to more in the future. Appreciate it. Meanwhile,
if you like this video, then like, share and subscribe to ET Now.